Relations. We will now listen to the management brief about the results, and following this, we'll open the floor to questions. HMG management, please begin with your feedback.
Thank you, Iyad, and good afternoon, ladies and gentlemen.
This is Iyad Ghulam on behalf of
today, the earnings call for year 2024 of Dr. Sulaiman ALHABIB Medical Services Group. Our thanks and appreciation to SMB Capital team again for hosting this call. The financial results for year 2024 were officially disclosed on 16th of February and are accessible on both Saudi Exchange website and our Investor Relations website. As you can see on slide number 2 of this presentation, we have our disclaimer, which is a reminder of everyone that we as a listed company cannot share any future performance guidance or any forward-looking statement. Therefore, future results may differ materially from any forward-looking statement made during this call. Please allow me now to hand over to our CEO, Mr. Faisal Nassar, who will provide a comprehensive overview of HMG financial and operational performance. After that, we'll be happy to address your questions. Mr. Faisal.
Bismillah ar-Rahman ar-Rahim. Thank you, Ziad, and warm welcome to everyone on the call today. Today we'll discuss the financial performance and financial results for the year ending December 2024. As usual, we will go through the financial results and the project update, and we'll leave most of the time for the Q&A. And if anyone has any question or clarification or new to the call, you are more than welcome to either ask your question or post it in the chat box. For the year 2024, alhamdulillah, we closed the year with another remarkable alhamdulillah results. If we look at slide number 6, as you can see, we have closed the year achieving a strong financial and operational performance, of course driven by our network expansion, increasing number of patients and volume, and also improving operational efficiency across all the segments. We have made, as you all know, strategic investment in our infrastructure, digital transformation, and service also enhancement, as we want always to reinforce HMG position as a leading healthcare provider in the kingdom. Strong profitability, alhamdulillah, reflecting cost management efficiency and operational excellence. Revenue, as you can see, grew by 17.7%, reaching 11.2 billion on a consolidated level, up from 9.5 in 23. Gross profit also rose 14.5% to 3.7, with a gross margin of 33.4. EBITDA as well increased 17.5 to 2.9, and we have maintained our EBITDA margin as well at almost 26.5. Net income also increased to 2.3 billion, up by 13.1%, with a margin of 20.6. As you can see, if we look at the segments on the slides, all segments delivered strong performance, and all of them have achieved double-digit growth. We look at hospital, maintained strong momentum. Revenue increased by 16.9 to 8.5, up from 7.3, 23. Of course, the growth was driven by high number of patients and also increased inpatient occupancy, also with the expansion that we have made during 2024. Pharmacy segment were in line, demonstrated strong growth. Revenue increased by 18.2% to 2.3 from 1.99 23. Of course, it was this increase was supported by the growth in the hospital segments and also patient volume. Solution and other segment witnessed significant growth, increasing by 44% to 287.4, up from 199 million in 23. Of course, this growth was driven by advancement in our digital healthcare and services innovation offered for the group and for also external clients. If we go to slide number 7, talking about the balance sheet, we have concluded 2024, alhamdulillah, with also a strong financial position, reinforced our ability to expand and invest in healthcare, and also support our long-term growth story. Total assets grew by 30% to 20.5 billion. Of course, driven by the investment that we have made during the year in which we have opened 6 new medical facilities across the kingdom, which we will also talk about them in the project section. The non-current assets now represent 74% of total assets, up 73%. Of course, due to the addition of the new facility, cash and cash equivalent accounts for 14%. Receivable and inventory were stable, but already were optimized during the past year to the highest level to support operational needs and the expansion of patient and pharmacy services. So, alhamdulillah, we continue to maintain a very healthy levels. Cash cycle also have shortened a bit this year, enhancing our financial flexibility and operational efficiency. Liquidity remains strong with current ratio at 1.28, ensuring financial stability, steady cash flow. Profitability also, return on equity slightly increased to 33.9. As we continue to focus, as always, on creating value for our shareholders. Return on assets and return on capital employed declined to 12.7 and 16.3 respectively, and as you know, due to the significant capital expansion. Overall, from balance sheet perspective, I think we have maintained our financial discipline, ensuring liquidity support for both short-term obligation and also long-term growth. I think with this level of resilient balance sheet and proactive financial management, we are positioned to accelerate our expansion and also always to navigate any market dynamics. If we go to slide number 8 on the leverage levels, I think we have managed the leverage effectively. As we mentioned in previous calls, that we're going to continue to have a balanced financial approach, enabling the investment in the new hospital medical center without compromising on financial strength or leveraging the company more than the acceptable level. If we look at total debt to equity, increased to 1.08 from 0.8, maintaining our financial flexibility while driven long-term growth. I think if you look at the overall ratio, alhamdulillah, we continue to manage the leverage carefully, balancing responsible financing with financial strength and long-term stakeholder value. If we go to slide number 9, as we remain committed to delivering long-term value to shareholders, as you have seen from our announcement, we have announced cash dividend distribution of 430 for Q4, which translates into 1.3 per share with 70% payout ratio, and making the total declared dividend for the year reaching to 1.67 billion or 4.77 riyal per share, with a yearly payout ratio of 72.11, up from 4.32 per share in last year. So I would like here also to mention that by this Q4 quarter we have reached to 5 years from being listed company, 20 consecutive quarter of alhamdulillah growth. Whatever we have mentioned in our roadshow, we have strived to make it happen and to make it reality. Looking at our CAGR in the past 5 years from revenue and net income, I mean, for the past 5 years we have continuously delivered double-digit growth in terms of revenue, CAGR of 18% from 2009 from 2020 until 2024. On the net income as well, we have delivered 22% CAGR from 20 until 2024. So alhamdulillah, it was something that we are really proud of, and we want to continue doing what we are doing, to always invest in strategic growth, remain focused on balancing profitability with shareholders' return, to ensure the most important message that we have mentioned in our IPO, which is sustainable value creation. If we go to so we highly appreciate our team. We highly appreciate the people that have invested their time, effort. We have went through the pandemic, which was a bit of turbulence, and not only in healthcare, in all of the sector. We have navigated through it, and alhamdulillah, we continue to do or to deliver whatever we have, whatever have been mentioned in the equity story during the IPO and over and beyond. And as I mentioned, it's always to ensure that there is sustainable value creation for our shareholders. If we go to slide number 10, which we always share during the end year result, this year, as you can see, remarkable growth when it comes to number of patients. We served over 7.4 million patients, up from 6 million in 23, driven by the increase in inpatient and outpatient volume, and also expanding our network. Bed occupancy, now we are at 58, and this is whatever has been added from the new facility. It was calculated on the new capacity of now I think we're standing at 3.3 thousand beds as compared to last year of 2000. So bed occupancy now we are at 58%, which gives us a huge room going forward for growth, inshallah, for more years to come. Revenue mix, very slight changes from between insurance and cash, as you can see in the slide, 73.3 to 74.3, cash from 22.4 to 21.4. So there is a slight changes, but I think this reflects on how we've been able to also to capture more and more insured patients. If we go to the slide number 12, which is regarding the project update. Alhamdulillah, it was a kind of a tough year as we continue to expand healthcare facility network, increase our access to the people access to quality medical services across the kingdom. As you know, in 2024, we have launched and operated 6 new medical facility. These 6 includes Sahafa and Riyadh, which is the biggest or the largest private healthcare, not only in the kingdom, but in the region. We have also launched Al-Fayha, which is the south of Jeddah hospital, our first hospital in the western region. Recently, also we have opened the extension of the Takhassusi hospital, which is women health, adding also 140 beds to our portfolio. Recently, as per the announcement, we have also in January opened Sahhat Al-Hamra, 90 beds in Riyadh, also expected to meet the healthcare needs of Riyadh growing population. Sahhat Al-Kharj and Muhammadiyah, which will add 140 beds and 350 beds. Both projects are expected to start operating in the second quarter of 2025. Tabuk, the construction is also going well, and this is going to be expected to start operating to 140 beds and expected to start completion by 2027. Jubail and Dammam were still on the design phase and taking the required licensing, and there will be, inshallah, announcements soon about the details of the project and when is the expectation of operation, etc., etc. With this, I think we have reached to the end of the brief on the result, and I would like to open the floor for you for any question that you may have. Please go ahead and let's have your questions.
Well, ladies and gentlemen, we'll now start the Q&A session. If you wish to ask a question, please click on the raise hand icon or type in the Q&A box. The first questions come from the line of Masha'al Al-Tuwajri. Masha'al, please go ahead. Masha'al?
Am I audible now?
Yes, you are. Please go ahead.
Good afternoon, and thank you for the presentation. So this is Msha'al Tuajri from SMB Capital. I just have a couple of questions from my end, and focusing on Q4 results per se. Faisal, can you shed the light on the reasons behind the margin pressure, namely the gross margin we saw during the first quarter, given that, especially in the large capacities were added previously in Q1 and Q2, and I'm referring here to Jeddah and Riyadh. Or during Q1, Q2, and Q3, and we barely saw any pressure on the gross margin. Whereas in Q4, which is considered to be the strongest quarter, mashallah, we saw a record high revenue. We saw a contraction of almost 140 bips in gross profit margin. Did we roll out any further capacities in Riyadh or Jeddah? As I remember, we were running on 33% utilization of capacities.
Okay. Well, thank you, Msha'al, for your question. It's a very good one. There is a number of reasons. One is that we keep in mind during Q4, we are loading up for 3 projects, which is one is Al-Hamra, which have already been open. Second, also Al-Muhammadiyah, because most of the staff have already been hired, and now it's been distributed. They are distributed within our facility. And also number 3, Al-Kharj. And they are loading up 3 projects within 3 quarters within your facility. But this is one of the reasons why, because of the increase in salary of those people and what have you. The second one, which you've rightly mentioned, and for example, Jeddah, south of Jeddah, we have expanded full capacity. We have just in Q4, we have opened whatever remaining capacity in the project, and the reason is that we are reaching a full utilization within, and we started with 35. We have added another 20 during, I think, Q2, end of Q2, and by beginning of Q4 or Q3 and mid of Q4, we have opened the remaining one due to capacity issue. It's a good reason, it's a good problem to have, alhamdulillah. So this we have added to it. We are continue to add to also Sahafa. Now we have loaded also for Sahafa to open another 30% because the current 30% have already been utilized. So add these together, I think this justifies the pressure in Q4.
Clear. Just one follow-up question here. We saw this in Q4, طيب, and with our revenue growth, mashallah. How should we look at 2025? Do we expect continued margin pressure as we ramp up the remaining capacities for Sahafa, but also the addition of Muhammadiyah Hospital and Al-Kharj? Speaking of Jeddah now, given we will have 2 hospitals there, do you see any potential cannibalization when we open the second hospital in Jeddah?
Okay. Let me answer you on the pressure, and the second on the cannibalization. The pressure, if you ask me, yes, there will be a pressure. You cannot open all of this facility within a very short period of time, and you will not have a pressure. But there is going to be pressure. But as I always say, pressure, yes. The issue here is not would there be a pressure or not. Definitely there will be. However, what you should be asking, as I'm addressing the long-term investor, is that how long the pressure would continue. I think this is the key question. And if we continue to do the ramp up like what we have done either in Khobar or even in Jeddah or in the previous project, this is a very clear evidence for any long-term investor that this is going to be temporary and things will go back to normal, inshallah, in due course. On the cannibalization, this two project, by the way, is serving totally different population. I don't think that this is going to cause that much of cannibalization. At least this is my own estimate, because and maybe the people from Jeddah could even more understand. And we are serving two different populations. This is to the very south and west of Jeddah, and this is to the very north of Jeddah. So, and even Jeddah expanded even beyond our location as well. But I don't think that there is going to be the cannibalization, and if there is any, maybe at the early beginning, and then like what we are, what we have seen in Riyadh.
Clear, maybe one last question, if I may.
ممكن بس
Sure. Yeah, I'll queue back in time.
The next questions come from the line of Tariq Sulaiman. Tariq, please go ahead.
Hello, can you hear me?
Yes, Tariq, please go ahead.
Yeah. Hi, good afternoon. Thank you for the presentation and congrats on the solid set of results. I mean, Mashal asked kind of part of my questions, but just wanted to check on something. I mean, you just mentioned that you already kind of rolling out the full capacity in Jeddah, south of Jeddah, and you're already adding to your existing operational capacity in north of Riyadh. So, I mean, how far are we more or less from the EBITDA break even in Jeddah? And why should we keep on expecting a lot of pressure into 2024? And here, please bear with me, just, I mean, thinking out loud. We have almost half of the capacity coming into 2025 of what was opened back in 2024. We already front-loaded part of the doctors for it. So effectively, I mean, just thinking about it, shouldn't we, I mean, unless you're expecting a softer ramp-up in the new capacities, why should we see such a huge pressure on margins, given that the new facilities are ramping up at a very healthy pace, and the new facilities are significantly smaller in size with a lot of under-penetrated areas addressed?
Okay, Tariq. First of all, I didn't say huge pressure. I think this was at the back of your mind, and you have mentioned it by mistake. I didn't say huge pressure. I said there will be a pressure.
Okay, fine. Fair enough. Fair enough.
Yeah, it's not a huge pressure, but there will be a pressure. You cannot open, and you cannot double your capacity. Basically, if we when opening the Muhammadiyah and opening Kharj, this is almost doubling the capacity. Yes, not all of it are in operation, but however, you cannot expect that there will be zero pressure.
Sure.
I can see investor more concerned about the pressure. If this pressure is coming because of expansion, and the ramp up is going well, and I will give you a good news because you have asked about it. For example, in Jeddah, we are already EBITDA positive.
Already, okay.
We are already EBITDA positive. But if you see this kind of ramp up going very well, maybe this is the 2024, 2025 is going to be the toughest year because 6, 7, 8 facilities are opening within the same time. Unless you are a magician, there will be no pressure. Okay. There will be a pressure. It's not going to be a huge pressure, as mentioned, but I have to be very clear and honest with everyone on the call. We'll continue, at least, alhamdulillah, to see to even break our numbers when it comes to in Jeddah. It was almost in November EBITDA positive, which is even a break through our previous numbers. Yes, it's in different city and we are there with one branch. Maybe this is an advantage, but still we are even our old number, which is 16 months in EBITDA, 22 to 24 in bottom line, we're start to break them, which is a good start or a good ramp up story. Now, how fast we will of course strive to make it as a smooth ramp up as possible. But even while the project, opened, if we see a good utilization, we will front load it with another staff to capture the other 60%. Sorry, the other 30% and the other 30% and less until we reach to the highest level. So with 8 facility, and we continue to ramp up, you will not see the real margin at least for another 8 quarters to see it more stabilized, and even if there was a pressure, it will come back again. But again, if we are achieving the EBITDA, if we are always breaking the numbers that we used to have, I think this is a very good sign for you, at least for inshallah a good 25, 26, 27 years.
Thank you, Mr. Faisal, so much for the answer.
Thank you, Tariq. The next question comes from the line of Khalid Al Khuzaim. Khalid, please go ahead.
CB team. Mr. Faisal, always thankful for your effort in explaining the results and providing us with the information regarding the sector, Ziad and the rest of the IR team. My question is related to DRG. I know that's early to give any feedback on DRG, but Mr. Faisal, we saw some insurance companies giving us guidance and clarifying the impact of DRG in their cases and the billing system, but still there is no clear guidance from the healthcare sector and healthcare providers in Saudi. So if you could at least just
Khalid, was the guidance to the positive or the negative?
Well, to be honest, all of them, they are positive and then the impact on them. However, it's questionable, as you know, they are always suffering. But on the other side, the healthcare providers, mashallah, they are always providing us with the strong results and the growth as HMD is doing. So I know that it's not at the time. We might have a little bit more. It's too early to give any forecast or an impact on the DRG. But as you know, it will be a significant event for the healthcare sector. And as always, HMG is a leader in this sector. So if you could give us any feedback or expectations in general.
Yeah. Okay. And I'm not sure what the insurance is expecting to have from DRG. But as I always mention, whomever is going to be prepared for DRG, there should be no effect. How the provider will or their performance varies, I believe, is going to be their readiness to adopt and implement the DRG. This is going to be, yes, it's a complete shift, especially only for the inpatient, not for the outpatient. It's a change in system, in processes, in awareness for the physician, in awareness for even the nurses, and how to price, the coding, the documentation, which plays a very major role in DRG, etc., etc. All of what I can say to you that we are going to be very well prepared. Maybe we have a bit of an advantage than others. We do have already a past experience and a learning curve on the DRG implementation when was that happen in Dubai. So we have went through it. We have changed the system, processes, aware, make everybody aware of it, documentation, coders, you name it. So this is not something new. Yes, the magnitude and the volume is going to be huge, not compared to Dubai, but at least on the principle, this is the same. It's exactly the same. It's going to be exactly the same implementation. What I can tell you that we are, though today we haven't even started the shadow billing, we have already started to enhance the system, bring the coders, started the awareness, bring solution to tackle the issues with documentation, etc., etc., etc. My question to you, I mean, the insurance, maybe they are looking at the overall sector. I don't know what their views, صراحة, but at least from our perspective, this is not going to be the case. Okay, we should not be affected by DRG. On the contrary, if you are more efficient and more precise with your documentation, I believe this is could be even in certain area, not all the area, certain area positive, especially if you are a provider of a sub-specialty services like what we are doing. Overall, we are not, I would say, worried. Yes, of course, this is a new regulation. We need to make sure that it is fair. The implementation is good. The implementation take its time, not to be rushed. I think we were assured by CHI on this particular issue. They were talking about a shadow billing for even 2 years, not only 1 year. And if a shadow billing have been done for 2 years and the provider is not ready, I believe this is on the shoulder of the provider not doing what he's supposed to do to deal with the changes. This is what I can say.
Thank you, Faisal. The next question is coming from the line of Alex Stefanos. Alex, please go ahead.
Just a couple from me. I think the first one is a good place to start. Is there any way we should be thinking about revenue, CapEx guidance for 2025 and beyond? Anything that you can provide sort of for the model building process?
CapEx, yeah, CapEx will be 2.8. Yeah, to double check. It's as we speak, it's 2.8 for 2025. And for revenue, now normally we refrain from giving guidance for the revenue because the ramp up plays a very big role on it. But if things are the same, I believe we should continue the same strong performance of 2024 in terms of revenue.
Okay, before I hop on to the next question, within that CapEx guidance, what would that entail? What does that include? What are you factoring in terms of the 2.8 billion?
It includes the remaining project spent mainly, which is the project that I have mentioned.
Yes.
And add to this, if we announce any new facility. Of course, this is also include a number of medical centers that we are budgeting. Again, we will announce whatever reach to licensing phase to the public.
So if I understand this correctly, there could be potential for new, particularly hospitals that could be opened in the near term, midterm.
No,
based on announcements?
No. For hospital, no. Whatever announced, there is going to be, other than the announced one, which the remaining two, which is Mohammediyah, north of Jeddah, and Kharj, there will be no announcement of a new project for 2025, unless, of course, as I mentioned, if we take the licensing for Jubail or for the Dammam. But at least this is the budget of the announced project already.
Perfect. And then, so taking a look at Jeddah, I think that's quite an interesting market. I've just been. So you've said that you're now EBITDA positive on the 2 hospitals that you've opened, and that will probably position you close to the top of the market share list before Key open up their hospitals by 2028. At which point they'll probably have the leading share. What is the strategy in Jeddah? Do you intend to sort of cater to your group of people? Is there much crossover between you and FCG, or do you intend at one point to sort of expand further there? Is that the area of focus because you already have dominance in Riyadh?
I think, in Riyadh, as you can see, even if you look at it from written premium perspective, you would see that Riyadh now is consolidating most of it. And then on the second place is Eastern region, and the third place comes Western region. As far as the growth in Western region is concerned, now we have 2 projects we are not planning as we speak, and if there is going to be anything, of course, that we will announce it in due course, but I don't see us expanding further as a hospital in Jeddah. If this is your question. I know that there is a number of hospitals opening in Jeddah, and some of which are expanding. But again, it's the market, it's the competition. We had it in Riyadh, and we have it also in the south of Jeddah, so we'll do it in the north of Jeddah.
Okay, thank you, Faisal. The next question is from Chiro Ghosh. Chiro, please go ahead.
Thanks for the call. Coincidentally, I had a similar question with the previous gentleman asked. Just to get a better sense, if you can help me understand how different is the dynamic of the Riyadh system, Riyadh market and Jeddah market, like the premium positioning, the revenue per beds, from those perspectives, just to get a sense of how should we model it. Basically, how do you see Riyadh market versus Jeddah market? Which one is more competitive from that perspective? And second one is, if you can please give us the total number of beds that you might be looking to ramp up in 25 and 26. These are my 2 questions.
For Riyadh and Jeddah, I can tell you, Riyadh, because of the volume, definitely Riyadh is I would say, from ramp-up perspective, from considering of course our position also as the dominant in Riyadh, this is Riyadh would be more interesting. For Jeddah, when it comes to revenue or say prices or revenue, I think it's the same. It's just the volume is different.
Okay.
I mean, most of the first of all, our contractor unified across the group, and we don't. For example, a client that we serve in Riyadh and we serve them also in Jeddah, and there is so many. It's the same prices, it's the same, almost the same revenue per patient, etc. But there is not that much of a difference when it comes to the commercial part. However, the volume is the real difference between the two. At least this is what I believe.
Okay. Thank you.
The second part of your question, which is the number of bed that we will be ramping up, at least as we speak, at the beginning, we will be ramping around 650 to 700 in 2025.
Okay, that's all from my side. Thank you very much.
Okay. The next question comes from the line of Dan Mikhailov. Dan, please go ahead. Dan?
By the way, Iyad, we want not to forget the people who's putting their question in the chat.
Yeah, sure. I will go back to them.
Okay.
Dan, you have a question?
Complications with my audio. Can you hear me now?
Yeah,
yes.
Please go ahead.
Brilliant. First of all, congratulations on a good set of results given sort of the ramp-up requirements. I just had two quick questions. The first of them is on the hospital revenue mix. How have you seen it evolve between inpatients and outpatients with the additions of new hospitals, and where are you seeing so faster ramp-up on like inpatient versus outpatient? And the second question I had was on the accounts receivables. It seems that the write-offs this year have increased relative to your previous year. So I was wondering what drove that write-off growth.
Okay, this is number two. Number one is the
Revenue mix.
The revenue mix. You said the revenue mix was the second part of the question.
Yeah, the first question was on sort of revenue mix between inpatients and outpatients in the hospitals, and how it has evolved with the addition of new assets.
Okay. Let me compare last year to this year, just to give you a view. I don't think that there is a change. Last year was between OBD was 62%, 63% and 37% for inpatient. This year, I think the difference is almost 1%. It's OBD 62 and inpatient is 38. So I don't see any deviation between before the new project and after the new project. And the revenue mix is 62 OBD for 2024 and 38 inpatient. 38% inpatient. And for the receivable, the second part of your question, this is why sometimes you can see it in whether at the end of the year, sometimes if it happens, or certain quarters, because of the signed final settlement. That you see it popping up in the financial, and we have signed during the December. We have signed with Taawuniya, Malad, Buba, and also Mid Gulf. Sometimes it comes all of together within the same quarters. You see it a big number.
That's understandable, but I was also thinking for kind of year on year. So the proportion of the allowance that was written, that was utilized, was more than double.
The proportion of
So that's just because of these settlements.
I think because
so if we do like ECL allowance versus like gross receivables, the proportion that you wrote off. So ECL allowance utilized, where proportion versus gross receivables, that ratio has more than doubled year on year. So you've been utilizing a bigger portion of your gross receivable, so of your ECL allowance on your gross receivables than you've ever done historically.
Let me let our VP Finance, Mr. Isan, to answer this question, please. Go ahead.
Hi. For ECL, you know that there is two portions for ECL. There is the addition and there is the write-off. When it comes for the addition, it's the same stable rate, which goes by 2.5, 2.55, compared to last year. So it's something you have to do it in each and every year to make sure that your provision is sufficient to mitigate any risk. Now, when it comes for write-off, this is impacted by the final settlement signature between the insurance and the client. So in this year, it was heavy settlement, we closed it. That's why you find the write-off compared to the opening balance of the ECL presenting 85 to 90% of that balance. I hope that answers your question.
Some questions now from the Q&A box, and then I will get back to the audio questions. There's a question from Kiran. How is ALOS evolved over the last few years?
Can you please point where we are?
And the last question, I'm starting from the last question because I'm assuming the first ones were, some of them were answered.
How is the length of stay evolved over the last year?
Yes.
It's I think it was the same, and for this, I think this is one also to answer also one of the question. I don't know whether it was Dan or the other one. What is the better ramp up? Is it outpatient or inpatient? No, inpatient takes more time for the ramp up than outpatient, and the reason is you cannot just open the facility and take the license and you expect a patient in the OR or a patient in the ICU or a patient in an ICU. This system has to be tested, has to be taken very slowly when it comes to a new patient, because you want to make sure that everything is functioning. I mean, at the end of the day, this is a life of a human being, so you cannot ramp it up very quickly, especially at the first and second month. You have to take it very gradually until you are confident that the system, everything is functioning, and you cannot accept high risk also cases at the beginning, and we are not doing also high risk procedure at the beginning. You start it gradually until you feel that okay, the nurse staff, the physician, the system, everything is going very well. So that leaves you for a longer ramp up if you compare it to outpatient, which is more easy. It's lab radiology and a consultation, which is very easy to ramp up. The length of stay, it is the same of our last year at 3.5.
Another question is about the rejection rates.
Yeah, but here one thing is that I think this is not the ideal or perfect length of stay, and this always have some sort of I mean, it gets affected when you open a new facility. The new facility is not at the speed of the existing facility when it comes to the treatment. As I mentioned, sometimes, especially at the beginning, patient tends to stay more. So it's get a bit affected when it comes to a new project.
Okay, thank you. There's a question about what was your sales rejection rate in 2024 from Saikat Mujamdir.
From?
It's Saikat Mujamdir. What was your sales rejection rate in 2024?
Sorry, this is something that we don't disclose. I think this is very confidential.
Okay. There's a question from Amy Trosidel asking, are you seeing any trends on medical tourism, either from within Saudi or from elsewhere in the region?
I think this is one of the new initiative that we will be investing heavily in 2025 and 2026. The government is supporting also this trend. We have been discussing big programs with the government now with the travel constraint, and easy access to tourism in Saudi. Yes, we have seen trend. We have seen trend in Riyadh and also in Qasim. We are seeing people from also Africa in Jeddah, and it is coupled with, as you know, the religious tourism going to Mecca, Medina. I think this is something will be in the coming few years, as with the support also from the government, is going to be a very big trend, inshallah.
Another question from Abdurrahman Al-Salloum. If you exclude the management fees from South Jeddah hospitals, will EBITDA will be positive?
If you what?
If you exclude the management fees from South Jeddah hospitals, EBITDA, will it still be positive?
It is positive after the management fee. If I exclude it, of course, it will be more positive.
Okay, I see a lot of questions about the breakdown of inpatient, outpatient. So I think you answered that question.
Answer the question, just to let everybody knows, it is 62 for outpatient in terms of revenue and 38% in terms of inpatient.
We have a follow-up question from Masha'il because she had some questions. Masha'il, please go ahead. Masha'il.
Yeah, thank you, Iyad. Faisal, this one last question. Since we were talking about margin pressure, or will pressure dynamic ramp up in 2025? Is price increases on the table now? Need to use it to mitigate some of this pressure, the short-term pressure.
البريشر هذا ياكل ويشرب معكم. مشاعل, انت from which SMB? From SMB, okay. To be honest, as we open new facility, I don't think this is something like, to be honest. At least maybe after we open all of the facility, then we might put this on the table. But as we are opening this facility, we need to gain the market share. We need to capture as client as possible, and then we can discuss the price increases.
واضح. يعطيك العافية. شكرا.
أهلا وسهلا.
Thank you, Masha'il. We have another question from Alessandra David. Alessandra, please go ahead.
I understand you don't really give guidance on the utilization as you add in new beds, but maybe if you could just give me a little bit more color as to when you are adding these new beds, what kind of utilization do you look for in like a piecemeal before you add the next leg of beds? I think just sort of understanding that would be quite helpful. Thank you.
And now let me just, Alexandra, let me just mention that we always start with 30 to 35% as I would say commissioning capacity, but we do have a furnished capacity up to 50 or 60%. And the rest we make it, we call it the build-up capacity, which we finish it. However, we don't put the furniture and the medical devices, etc. And we start with the 35 before, when we reach the 70, 75, it's either or we do have 1 day or 2 days of full occupancy for the 35%. Because in order for you to operate the next 35%, you need staff and you need commissioning for this extra bit, whether it's a bids for admission or ICU beds or NICU or CCU, etc. The critical care, non-critical care, etc. So whenever we reach 75, or we do have a days of full occupancy in the hospital, this definitely triggers increasing the capacity, because you don't want people, especially when you are opening a new facility, to come at your hospital or your ER and you cannot admit them. And this is considered a very important KPIs, especially when you ramp up a new hospital, and also especially if you are going toward the new city. You want always people, when they come to you, they find a bed and you can admit them. So this is, I hope I have answered your question.
Thank you. There's a question from Abdullah Shamsan. He asked a question and a follow-up on that. Could you please provide a breakdown of visits? He said only visits, not the revenue itself.
For the visits, it's 3.5% of inpatient and 65. Second, just to make sure. It's 96.5 for outpatient and 3.5 in inpatient.
Okay, we will take one last question from Abdurrahman Al-Salloum. Abdurrahman, please go ahead.
To clarify my question in the Q&A box, with regards to the fees that management fees, if we exclude it from South Jeddah Hospital, will EBITDA remain positive? I mean by that the management fees that being charged from HMG to the West Jeddah Hospital. If we exclude that from EBITDA calculation, will it still be positive?
Abdurrahman, Jeddah is fully consolidated with our financial. I mean, if we exclude it, it will be even more positive. I don't know how you are calculating the management fee. If I exclude, this is after the management fee, the EBITDA is positive. If I take out the management fee as a cost to the project, and I'm looking now at the P&L of the project, okay? If I take it, that's mean I'm minimizing their cost, okay? Which would increase the cash and make the EBITDA even more. So if you exclude the management fee, it's going to be even more positive. I mean, this is how I'm trying to explain it to you. If you include it, and even it is positive.
Okay. My question was about the fees as it being charged from HMG, because I know that, as you have mentioned, if you exclude it, it's going to be more positive. But this is on the P&L for the West Jeddah Hospital. Are you talking about that, or you are looking at from HMG perspective? So you will add it back.
I'm talking now. I'm talking about the financial and the P&L of Southwest Jeddah. Okay, they have the revenue, they have the gross profit, and after this, they have the whole SG&A, part of which is the management fee of HMG. Okay, if you exclude it, it's going to be as if you are minimizing their cost, which is going to be, or expenses to be specific, which is going to add to their cash.
Clear. Thank you so much.
Okay. Yeah. Go ahead.
Any final remarks, Faisal?
No, I just want to make sure that whatever in the Q&A box is always all answered. And if there is nothing, if there is any question which is not answered, please, I will ask our investor relation to answer them, and to answer them يعني, on one-on-one and send it to them. That's it. Thank you very much. Any further question for anyone, please reach out to our investor relation or arrange a call. We will be more than happy to address your question and answer them.
Thank you.
Thank you so much, Faisal. SMB Capital would like to thank HMG Management for taking the time to conduct this call. We would like also to thank all participants for attending. We wish you a pleasant day. Thank you.